Today, with this video, I will be at your service to teach you about the reasons behind the formation of trend lines, how resistance acts as a barrier, how to draw trend lines correctly, and some very subtle but important points that most traders overlook, which often leads to losses and their stop losses being hit. So stay with me until the end of this video, because your perspective on trend lines will completely change, and you'll see how many accurate and profitable trades you can make. Look, at a certain significant level, discerning buyers actively entered into buy trades. In other words, there were indeed many eager buyers present in the market. After successfully reaching a substantial and reasonable level of profit, these astute buyers carefully close out their open positions, securing their gains from the market. What does that mean? It means that at this specific moment in time, they are making the deliberate decision to close out the buy trades that they had previously and strategically opened, effectively exiting their long positions in the market. At this particular point in time, we have active traders, or more precisely, dedicated sellers, who consistently enter into sell trades, aiming to profit from market downturns. In this area where the buyers have closed their trades and the sellers are entering the market, with the closing of buy positions and the opening of sell positions, the price makes a corrective move until it reaches a level where buyers once again enter buy positions in this area. After the price eventually returns to its previous established level, that is to say, precisely where the initial sellers originally entered their positions, or alternatively, where the previous buyers who had successfully made profitable buy trades ultimately closed their respective trades, these very same sellers, with a strong expectation and hope that the price will indeed drop once again, then proceed to enter new sell positions once more, anticipating further downward movement. In this particular area of the market, however, as the determined and persistent buyers gradually gain more significant strength and influence, the price consistently continues its upward trend and ultimately reaches another crucial and higher point, establishing a new benchmark. At the point where the sellers entered, the trade just. They were hoping that the price would go down, but the price continued to rise. These sellers in this area are completely at a loss and unsure of what to do next. And in this area, the buyers who bought at this bottom here are exiting their current positions in this region with a significant profit. So what exactly does that mean? What precisely happens? It fundamentally means the market ultimately makes a correction back to its previous established level. Now, those who had actually opened positions in this area are now at break even, meaning their losses have been recovered and they're at zero. Out of fear that the price might make a sharp pump-like move upwards, their positions, they close them in this area. And with the buyers who were at the previous two bottoms, they start buying again and re-enter their buy positions. A new support is formed again and the line moves upward, or to put it better, the price continues its upward trend. It keeps moving in this direction, and we call these buyers and sellers the ones who have caused the movement of this trend line. Look, we can clearly and precisely draw a very distinct trend line right here, and we specifically refer to this particular line as a trend line. It is an upward sloping trend line characterized by the fundamental condition that the buyers are demonstrably stronger and more dominant than the sellers, and that is precisely why the price is consistently and steadily moving in an upward direction. Well, you might be wondering precisely when the sellers become significantly stronger, causing the price to genuinely start moving downward. This crucial movement, which I will thoroughly explain to you on a detailed chart, is a key indicator. Look, we are on the gold chart in the 5-minute time frame. We had an upward movement from the price floor to the price ceiling, and then it became volatile. So the price of gold, look, we are on the gold chart. In the 5-minute time frame, we had an upward movement from the price floor to the price ceiling, and then a drop that the gold price made on its own. Look, in this area, we had sellers, and in this area, we had buyers. We say that the buyers were stronger than the sellers because they were able to break through their resistance. To put it better, when the price is below the core, in this area, we had sellers, and in this area, we had buyers. We say that the buyers were stronger than the sellers because they were able to break through their resistance. To put it better, when the price is below, let me put it this way. We call it support or the support line, and the lines that are above the price. We call it support or the support line, and the lines that are above the price, we call them resistance or indeed resistance lines. After these significant lines are decisively broken, resistance lines then effectively turn into robust support lines. Conversely, resistance lines after they are broken will typically transform and turn into support lines. However, for the purposes of this particular video, we are not going to be dealing with these specific transformations or their detailed implications at this moment. We want to know precisely when this significant trend line truly loses its upward strength and momentum. Look closely when a crucial resistance level is decisively broken and the price subsequently moves downward toward its established support line. We often observe a noticeable and significant price gap forming quite near the support line. Let me show you near the support line. The significant gaps that are observed between the daily candles are consistently located at the critical price floor. Observe closely. When the gap is notably large, it serves as a powerful indicator, unequivocally signifying that the buyers possess such overwhelming and undeniable strength that they were entirely unwilling to permit the price to descend to the established support line, thereby preventing any further downward movement and firmly holding their ground. Again, you can clearly see that the gap is quite large. But when the current price reaches the significant support line, and subsequently, when it's making a temporary correction in its movement, it consistently gets there with a very small gap. Look, the gap between this area and this range is very small. We say that the strength of the buyers is decreasing, and gradually the strength of the sellers is increasing. Look, in this part as well, we no longer have any gap. With the significant support level and the subsequent price correction that precisely happened after this crucial support line was decisively broken, we then experienced a prolonged downtrend and a pronounced bearish market condition. So pay attention. When the trend is upward, when the strength of the buyers doesn't allow the price to reach its support line, we say the trend is still upward for now. But as the strength of the sellers gradually increases and the price during corrections can reach its previous support, we can confidently say that the current trend line is basically coming to a definitive and conclusive end. Here we also need to talk about the downtrend line and support, and the resistances that can be drawn for the downtrend line as well. We will have a separate video and tutorial on that. I hope this tutorial has been useful for you. If you like this style of teaching, please hit the like button and subscribe to the channel to see future tutorials, so you'll always be the first to see my new tutorials. Until the next video, goodbye.